Tonight we're diving into a new kind of power struggle. One fought with AI chips, not ballots or armies. These chips are the backbone of artificial intelligence, and whoever controls them shapes the future. In China, the demand for Nvidia's H200 chip has reached a frenzy. Chinese tech giants are scrambling to secure over 2 million H200s, but Nvidia only has about 700,000 available. This shortage has created a seller's market, with Nvidia holding all the leverage. The H200 is essential for training the massive AI models that drive everything from e-commerce to social media. Without it, Chinese companies risk falling behind global competitors. The stakes are high, not just for business, but for national strategy. Every chip shipment is scrutinized, as US-China tech tensions escalate. Policies can shift overnight, adding uncertainty to every transaction. For Chinese firms, buying these chips is a high-risk, high-reward gamble. It's not just a purchase, it's a strategic move with financial and political consequences. The rush for H200s is a defining moment in the global tech race. The outcome will shape who leads in AI for years to come. In this new gold rush, the winners will define the digital age. Nvidia has responded to this demand with a bold move. Chinese customers must now pay the full price for H200 chips upfront. Gone are the days of small deposits and flexible orders. Now, it's pay in full, no refunds, no changes, no exceptions. This is highly unusual for multi-million-dollar tech deals. Why so strict? Nvidia is protecting itself from political risk. In 2025, a sudden US ban on the H20 chip left Nvidia with billions in unsellable inventory. They're determined not to repeat that mistake. By demanding upfront payment, Nvidia shifts all the risk to its Chinese buyers. If new bans hit, Nvidia keeps the money. Chinese firms bear the loss. Some clients can use insurance or collateral, but the financial commitment is absolute. Nvidia's CEO, Jensen Huang, knows demand is sky-high, giving him the power to set tough terms. This is a calculated strategy to survive in a volatile market. For Chinese companies, it's a take-it-or-leave-it offer. The message is clear. In this high-stakes game, Nvidia is playing to win. The rules of global tech business are being rewritten in real time. For Chinese tech firms, Nvidia's new policy is a massive burden. They're being asked to pay billions upfront for chips they might never receive. Each H200 costs around $27,000. Orders quickly reach astronomical sums. This ties up capital that could fund research, hiring, or growth. The risk is real. Beijing has asked some companies to pause orders, and new rules may require buying domestic chips alongside H200s. If regulators block imports after payment, companies lose everything. No refunds. The first H200s may arrive before Lunar New Year, but larger orders face long waits and higher risks. Smaller startups are especially vulnerable. Only giants like Alibaba or Tencent can absorb such risks. This could concentrate AI power in a few hands, stifling innovation. The policy may reshape China's tech landscape, favoring the biggest players. For many, the gamble is simply too great. The future of China's AI ecosystem hangs in the balance. The stakes have never been higher. The H200 story is shaped by shifting US and Chinese policies. The US has long tried to limit China's access to advanced chips, fearing military use. In a twist, the Trump administration allowed H200 sales to China, but with a 25% fee per chip. This opened a window for Nvidia, but added new costs and uncertainty. Meanwhile, China wants to reduce reliance on US tech and boost its own chip industry. Regulators may soon require companies to buy domestic chips for every H200 imported. Beijing will approve H200s for commercial use, but bans them for military or critical infrastructure. These rules create a maze for companies to navigate. Every deal is a balancing act between opportunity and risk. The landscape can change overnight, making long-term planning nearly impossible. For tech firms, survival means adapting to a world where policy is as important as technology. The rules of the game are always in flux. Why risk so much for the H200? Because it's a game changer. The H200 is Nvidia's second most powerful chip, designed for the toughest AI tasks. It's 6 times faster than the previous H20, which failed to impress. The H200 slashes training time for massive AI models, saving millions and enabling rapid innovation. It powers everything from smarter assistants to advanced virtual worlds. For Chinese companies, it's the key to staying competitive globally. Without it, China's AI progress could stall for years. The H200 isn't just hardware, it's a ticket to the future. The performance gap is so wide that companies are willing to take huge risks. Missing out means falling behind in the next wave of technology. In the race for AI, the H200 is the ultimate prize. That's why the scramble is so intense. China's long-term goal is self-sufficiency in chips. The government is pouring resources into domestic chip makers like Huawei's HiSilicon, creator of the Ascend 910C. The Ascend 910C is China's best answer to the H200, but it still lags behind in performance. For the biggest AI projects, only Nvidia's chips will do. That's why Chinese firms are still desperate for H200s. Beijing's new policy may require companies to buy a domestic chip for every H200 imported. This guarantees a market for local chips and helps them improve. It's a clever way to close the gap over time. But building a world-class chip industry is a massive challenge. It's not just about hardware. Software, tools, and talent matter too. China is making progress, but catching up to Nvidia won't happen overnight. The race for chip independence is just beginning. Nvidia's upfront payment policy is shaking up the global chip market. Other tech companies are watching closely. If it works, they may follow suit. This could make high-risk markets even tougher for buyers. The global supply chain, already fragile, could fragment further. Companies may turn to friend-shoring, relying on partners in allied countries. The era of a seamless global tech market may be ending. Nvidia is ramping up production with TSMC to meet demand, but any disruption could have global consequences. The company's dominance lets it dictate terms, but rivals like AMD, Intel, and Chinese firms are racing to catch up. Profits from H200 sales will fuel Nvidia's R&D, widening its lead. This cycle makes it hard for competitors to close the gap. The stakes are enormous, for Nvidia, for China, and for the future of AI. The chip wars are just heating up. The outcome will shape the next era of technology. This chip battle isn't just for tech insiders, it affects us all. AI chips like the H200 power the apps, websites, and devices we use every day. The US-China rivalry could split the internet, changing how we connect and what services we access. The winner will help set global standards for AI ethics and safety. For consumers, this means faster innovation, but also higher prices and possible shortages. The 25% US fee on H200s will likely be passed down to buyers. Disruptions in chip supply can impact everything from cars to game consoles. Access to AI is becoming as vital as electricity was a century ago. The choices made now will shape which countries and companies lead the next wave of innovation. From medicine to climate solutions, AI's promise is huge. That's why this chip story matters. It's about our shared future. The outcome will touch every part of our lives. What's next? The world is watching the first H200 shipments to China. Their arrival is just the beginning. Political interference could still derail larger orders. Beijing's decisions on domestic chip requirements will shape the market's future. China's drive for self-sufficiency will only intensify, with more support for local champions like Huawei. The success of this push will impact the global balance of power for years. Nvidia, meanwhile, must keep innovating and navigating political minefields. One policy change could upend its strategy overnight. The company's future depends on its ability to adapt. For the rest of us, this is a reminder. Technology and geopolitics are now inseparable. The choices made today will echo for decades. The future isn't set. It will be shaped by this contest for tech leadership. That's why this story matters to everyone. It's not just about chips. It's about the direction of our world.